problems are so you'll know. This one problem, how many? Well, let me go. Problem number 1. I think there's 6. 6 problems. 5? Hang on. No, I knew there were 6. 6 problems. Yes, I can pass it around. You can take a look at it. You can figure out how many there are. Give me feedback. See, here it is. Take it home. Then have a party on Wednesday.
I can cook.
Excellent. All right. So, this problem has to do with inventory. And I mentioned the situation. There are about 7 different items. And what you're to tell me is, we're trying to determine if they reported the correct inventory at the end of the period. And they may have included some things they shouldn't have and not included some inventory they should have. So you read these 7 things. Should this be included? Should it not? So things you should know. FOB shipping point, FOB destination, in terms of who owns the inventory. Goods on consignment, right? Okay, so anyway, so you're to tell me, well, so how much should be the, of these 7 items, all I want you to say is, there are not even any numbers. Item number 1, should that be included or excluded?
Oh.
50-50 chance. No, I'm just kidding. There'll be 7 like that. Included or excluded. No numbers to determine.
Cool.
Okay. The next one is a problem, again, on inventory. And you're to calculate cost of goods sold based on a certain cost flow system. Again, they use periodic, not perpetual, so it should be much easier to calculate whether you're using LIFO or FIFO. It's one or the other. Okay, periodic is easier than perpetual. And then determine if there's any LIFO liquidation. What happens in LIFO liquidation? You're dipping into the older inventory because you sold more than you purchased, right? In the current period. So how should you report that on the financial statements? Reporting on the financial, if it's a liquidation, you have a separate disclosure as to why your income changed as a result of liquidation. You do have a little blurb on your page. I don't remember what page, but it was there. It was a little calculation about the difference. You have to essentially let the readers of the financial statements know, no, we didn't do fantastically well because we sold more. We had a LIFO liquidation. That's why we made more money, right? Isn't that that's a disclosure?
Does it have to be material?
Well, I want you to think of this one as material.
Okay.
Okay. And who determines materiality?
You do.
The company. If I didn't think it's material, I just want to let the investors know I did real well. It was immaterial. All right. This other one is recording a disposition of an asset. Dispose of an asset. What's its book value? How much did you sell it for? So it's the journal entry to dispose of it. What do we do in a typical journal entry for a disposition? Debit accumulated depreciation. Well, we sold it for cash, right? Debit cash, debit accumulated depreciation, credit the asset, whatever its cost is sitting on the books, and either debit loss on the disposition or credit gain. Right? And here's the easy part. You know the cash, you know the accumulated depreciation, you know the cost. You just need to know whether it's a loss or a gain.
Okay. So
I'm making this too easy for you. I want you guys to relax. Okay. Next one. Oh shoot, impairment loss. This is this chapter here.
That's fine.
Goodwill. It has to do with goodwill. How much, you have to be able to determine how much of this purchase was goodwill, and we did that in chapter 10, right? And then if there's an impairment loss, then record the journal entry. We'll look at how we determine impairment loss. That's 4 so far. Number 5. Wait a second. It's 2 of the same problem. Wait a second. Oh, I was freaking out a little bit. Is that what I did?
Same problem twice. Keep it. We'll give you 2 different answers.
21, 22. Where's 23, 24? Did it fall out somewhere? Based on the answer, I can tell you what 23 and 24 are. As to why they didn't print or where they are, floating around somewhere. That doesn't make sense. All right, well, let me tell you what 23 should be. I know we jumped to that chapter. Not 20. 2 more problems. One of them has to do with determining using the gross profit method. Remember the gross profit method? Chapter 9, right?
So what are we determining?
The gross profit method determining what the cost of goods sold is. And so that's one of the problems. And the other one is a problem on determining the value of the ending inventory when you are using the cost to retail percentage. I know the answer, and I'm trying to determine. It's one of those methods, and it's not LIFO and it's not LIFO. It's one of the simpler ones. Chapter 9. Yep, no, chapter 9, and that's it. Those are the problems.
I'm waiting for it.
Oh, no, I'll tell you what method, but right now, I know it's not LIFO. I looked at this answer. It's not dollar value LIFO either. How's that? Not asking any of those. It's one of the simpler ones. All right? Do you feel better? Oh, you want to know what's on the multiple choice questions too?
Sure.
One-
How many from each chapter?
They're evenly divided.
Right.
There's 20. There's 20 multiple choice, so 5 at each.
Okay.
And I'm looking to see how many actually involve numbers in the multiple choice. And all I see is that only one of them involves numbers.
Awesome.
Wow.
So questions about when we talked about cost flow methods, we said that depending on whether you have rising prices or decreasing prices, you would be able to tell which method results in higher cost of goods sold, right, or lower, therefore resulting in either higher or lower income. And we talked about periodic and perpetual making a difference, but that one of the methods, let's see, the end result, whether we use perpetual or periodic, would be the same. Which one was that?
No.
Getting a lot of answers. We know it's not weighted average, right? Because I keep hearing LIFO and FIFO. It's FIFO. Okay. So again, those are the kinds of things I want you to know in terms of that chapter. And in that first chapter, chapter 8, I am going to, let's see, the multiple choice that involves numbers has to do with an inventory problem. Here's the physical count of the inventory. Here's some additional information. Is that inventory correct, or should it be changed, and to what number? You know, and having to do with whether a shipment was included, whether it was FOB destination, FOB shipping point, whether something was on consignment, to determine what the correct. So not only did I have a problem that didn't involve numbers in the problem section, but this one in the multiple choice does involve numbers. Try to be tricky here, right? Makes sense? It's the same kind of problem, but in the multiple choice it involves numbers. In the problem it did not involve numbers. I just wanted you to tell me if it was included or excluded.
Are we going to use the same short standing?
Yes, it's only 20 multiple choice questions, so yeah, that one's the best one. In fact, that one should be used because I need to have just one key. Let's see. So again, you should know what happens in a period of rising prices or decreasing prices. And, you know, what are some of the reasons for using LIFO? Remember those? Why would anybody want to use that? What about lower of cost or market? What does that mean? We talked about the floor, the ceiling. So it's open book. Please, you know, you'll be able to look, right? I expect you to be done with this test in 1 hour. Just kidding. Cost to retail percentage. For the LIFO retail method, there'll be a question as to whether we include something in there. What do we include? All the possibilities, markups, markdowns.
And you said related to LIFO.
Yeah, LIFO. Again, open book, you'll be able to find it. Retail inventory method. Question on the retail inventory method. A question on dollar value LIFO. What are the steps in calculating this estimate of ending inventory and cost of goods sold? Remember the steps we used? First of all, we did the percentages, and then we brought it down to the base year prices, right? To see if we'd added a layer, and then we converted it back to. We had two percentages, one for the beginning inventory and one for the current, the additional purchases in that year. I don't expect you to have all that memorized right now. I mean, but you should look at those. In a week, yeah.
Okay.
No, in a week and 2 days. And you don't have to memorize it. Is that true?
Yeah. You need to know what you're looking for.
You need to know what you're looking for. You should have read the chapters, and you should already go, I can see that page in my head now. It was chapter 9.
Yeah, it's on the next page.
You should know about goodwill. Do we amortize it? What do we do with that? What are asset retirement obligations? You should be able to answer a question about asset retirement obligations. Those happen when you have natural resources and you're destroying the land and you got to put it back to a usable condition. We use present value, didn't we there? Okay. Lump sum purchases. Best example is you buy a building which is sitting on land, and of course you have to buy the whole thing. They usually don't just sell you the land but not the building, or the building but not the land. And it costs you a certain amount. You have to figure out what part of the price is the building, what part is the land. Best reason to find out is you don't depreciate land. You do depreciate the building. Right? If you wanted to buy a rental, you buy a single family dwelling, you are going to buy the land it's sitting on. It's typical. Has anybody ever bought just the land but not the building?
Yeah.
Yeah, of course, developer.
Oh, no. I understand. If you want to use the building, can you just buy the building or just buy the land? Okay. And you can only depreciate the building, not the land.
I want to be a big developer.
Okay, you want to buy a house, Martin? You say, can I just have the house but not the land?
No, but you can technically buy a house or someone else.
Technically, but we're not gonna, again, technically you could do anything, given enough money and enough whatever desires you had. But most people are looking to buy a house to rent as an investment. They're buying it sitting on a piece of land. But yes, you could technically move it. Pay somebody to move that and take it elsewhere. It's gotta sit on some land somewhere.
Yeah, but I was
Mobile
just thinking it's not very uncommon that you buy a house that you rent for someone else, but you have a contract that you can use the land.
Yeah, that's what I was thinking.
And we never get that complicated here. When you're buying a building, you're buying the land it's sitting on too. And so this is just, you're separating it because you want to know what price to allocate to each component. Okay, so what do we look at? Do we look at future cash flows? Oh, good. You don't have
Commercial
to-
is 39 years, right? You amortized for the building.
I do not ask any tax questions here. So you will not have to know whether you depreciated 39 years, but thank you. But I'll ask you a question on S corporations.
Okay.
This is my tax class, I'm sorry, I have to give them a bad time. No questions on that, no.
Okay.
Huh? All of them. 67A, 67B,
And she's the
68.
only instructor.
I'm not the only, there's a night instructor.
Oh, really?
Night.
Oh.
Yeah, but I am the only one in the daytime,
Okay.
so I do teach them all. That's what I did, by the way. That's what I do too. I'm a CPA. I still have a small practice, but I've done tax.
I know your income 2009, $200,000.
What?
I don't know. She laughed before I could hear her. Anyway, number 14. Oh,
198. $198,000.
securities. Why am I asking you a question about securities? Oh, I know why. Hey, assets. Can you exchange assets for securities? Do you ever get securities? What value do we put down for the assets? Software development costs. Are they capitalized? Are they not?
No.
At what point? Remember we talked about, what did we call it? Some kind of feasibility? Technological feasibility. So go back and review that one. Depreciation, depletion, amortization. That's this chapter here. What are those? What are we doing when we do that? We are allocating cost, right? You need to know how to calculate amortization, and you need to know what is it that you don't amortize. Well, you already know, goodwill. Okay, let's see. What happens when we change the estimated life of the asset? We do an estimate in either the life or the residual value, or we change depreciation method. We're going to learn that in this chapter. We'll have impairment of property, plant, and equipment. That happens, as well as impairment of goodwill. And, wow,
PPE.
impairment of property, plant, and equipment. We're going to do that in this chapter, so I don't expect you to know it just yet. And there's one question on the international standards. One, having to do with how you handle impairment loss for property, plant, and equipment. So we pay close attention tonight, right, for that difference. You know, if you've done the homework and you've been here for all the lectures, it should not be a very taxing test.